Oh, hello there. This is Tyson from Trip Capital. Thank you so much for visiting our channel. Obviously, you might be somebody that is interested in trading the financial markets and making money long term trading the financial market. So I'd advise you to just subscribe to the channel if you're new, and also don't forget to click on the notification button so that each and every time I post a new video, you can get notified. So in today's lesson, I'm going to be talking about the number one tool that has helped me make money consistently within the foreign exchange market. So let's just dive in. Alright traders, so as I've already hinted, I'm going to be talking about the number one tool that has helped me consistently make money within the foreign exchange markets. And this tool is called the Fibonacci Retracement tool. In my experience trading the financial markets, I've been using this for quite some time, and I've consistently made gains trading it the right way, because you can have the tools and still use the tools the wrong way. So today I just want to show you how I use the Fibonacci to look for entries within the markets and also consistently make money within the trading markets. So to understand how the Fibonacci's work, you need to also understand the background behind them and how you can get to use them going forward. So one thing to understand about the markets, right, is that the market is always moving in two phases. It's either we're going to have a push or a pullback. So in case we're having a descending trend line, right, and price is just moving to the downside and we're having bearish momentum within the markets, then we're going to have the first swing to the downside. For example, over here, we're going to call this our first swing lower, right? And we use what we call our A, B, and C and D points to use our Fibonacci. So the A and C and B point, I mean to say, is what we call our first swing. So this can be our A over here. So we're going to call this our A point where the swing started, right? That's A. We also have our B point, which is a swing lower where the swing is going to end going to the downside, in this case, since we're looking at a bearish swing. So this is our B. However, the market doesn't always move in a straight line. It ebbs and flows. We have a push and a pullback, as I already stated. So after we see that we have a push to the downside and we missed out on the trade, we just patiently wait. We wait for what? A pullback, because it will come, since the market is always moving in two phases. So gonna wait for the pullback. However, you need to know where you're gonna be entering, because price has areas where it's going to pull back to. It's either the 50%, the 61.8, and the 78.6 Fibonacci retracement zones. So we're going to draw them over here. So we'll draw our fib from the top of the swing right here to the bottom of the swing. So we have our A, our B, and then now we're looking for our C point. And then we have three areas where price might potentially reject before moving to the downside, continuing with the overall bearish momentum. It can first reject the 50% fib, or it can push higher to reject the 61.8 fib, or to the last swing higher, which is the 78.6 fib. If price pushes to the upside and ends up breaking above our A, then we're not going to be taking any trades going to the downside. So for example, let's say price respects our golden pocket, and our golden pocket is in between our 61.8 and 50% fib. This is what I like to trade the most, in between these areas over here, right? So let's say price comes back to our C, and our C is at the 61.8 and the 50% fib, which is what we call our golden pocket over here. Now, the last thing that we're going to look for, since we have our trend, it's bearish overall, right? Price came back for a pullback. This is acting as our dynamic resistance level in between the 61.8 and 50% fibs. Now we're looking for a price action signal. At Trip Capital and Trip FX, we trade 4 price action signals. It's either we have a bearish pin bar, inside bar, a fakey setup, or a bearish engulfing candle. So let's say in this case we have a bearish pin bar over here, right? Let me just use my brush to illustrate. Let's say we have a bearish pin bar over here, which indicates a rejection of higher prices, and price might potentially move to the downside from here. So what happens is that we need to be having our target going to the downside over here, and the negative 27 is our target going to the downside. So this is where price might potentially move to the downside to form a new lower low within the markets. We've had our lower high over here. We've had our lower low. We have had another lower high. And since we're moving in a descending trend line, or we're having descending momentum within this market, then the market is most likely going to push to the downside to form a new lower low before it does the same thing all over again, having that pullback. Right now, let's say price had a pullback once more after it respected and tested our negative 27 fib, which is our downside going to, it's our target going to the downside over here. So your entry, you could have taken it over there, stop loss just above. This is just an example, guys. And then your target, you look at the negative 27. And then voila, you've had some profits on this trade. Now, moving on. As long as we're still having bearish momentum, once again, we're going to apply our fib from the top of the swing to the bottom of the swing if we're having a descending trend or descending momentum, right? So let's say price pushes higher and respects only the 61.8. This is where we're going to be looking for opportunities to go to the downside. We're going to be looking for a price action signal to continue moving to the downside. And once more, we use the negative 27 as our downside target. So it's that simple trading this Fibonacci retracement zones. You just need to know and understand where you're going to be entering into your trades and using the overall market momentum to look for opportunities to ride the wave. So here's what happens with most people. They see this swing lower over here and they can tell that they missed out on the trade. So they enter their shorts on the exhaustion of this push lower. The smart money, what we do at Line Troop Capital, what we do at Line Troop FX, and what the other big banks and financial institutions are doing, they're waiting for price to have this pullback because they know that it's most likely going to happen. And once it happens, they use the fibs, right, together with the overall market momentum and the price action signals to look for opportunities to ride this market going to the downside. So let me just erase this and just show you how effective this can get using a real chart. All right, let's just move higher. This is a USD CAD chart, guys, on a daily. So I'm going to show you how effectively you can use your fibs to make money within the Forex markets and look for the right entries within the markets. Now, we've had a push to the downside over here on USD CAD, right? Let's say you missed out on this initial move over here. Maybe you were just busy, you were caught up, you missed out on the trade, right? The down money will be trying to sell into the market over here simply because they have the fear of missing out on the trade. And trust me, already you've missed out on the trade. So you just have to patiently wait for the next trade because the next trade is always around the corner. This is what I'm always emphasizing, that the next trade is always around the corner. So don't be in the business of chasing after trades, right? Now, after we have had this push to the downside, this is our A, this is our B. Now we're looking for our C area. So let's say at that point in time, you didn't have this over here. Actually, let's just do this. So price was somewhere around this region. And you knew that the market is always moving into phases. So it's so much better for me to patiently wait for the next trade. Why? Because it's always around the corner. So you apply your fib from the top of the swing to the bottom of the swing over here, right? Now let's see how this plays out. So you can see already price showed some sensitivity in and around this region, and now it's pushing higher for that pullback after we've had our first leg lower, our A and B. Now we're looking for price to react around the C area and region. Now we're seeing some sensitivity in and around this region. Voila, look at that, precisely. We've had our A, our B, our C, and this is what we call a fakey setup at Line Troop Capital, right? So we have the mother candle, an inside bar, a subsequent false break to the upside. However, due to the selling pressure around this golden pocket of our Fibonacci retracement tool, price moved to the downside and indicated a lot of bearish pressure over here. Where do we take our entries? Just right here. Stop loss just above the high, and then you look at your negative 27 as your downside target. Look at that, guys. Precisely to the T, we tested the negative 27 fib. Great risk reward. You're risking 1 to potentially gain 3.89. Great risk reward on that trade. Now let's move on, just to show you that this works. This really works within the markets. Now let's speed up this over here and continue playing this out. So price is still continuing to the downside, right? And then we have 1.30,000 as our monthly support over here. This is where we're going to be anticipating price to complete this leg lower over here. So you patiently wait. This is where the down money is selling into the market, anticipating that the market is still going to continue moving to the downside. So you patiently wait. Alright, so now we're going to draw our fib once again from the top of the swing, right, to the bottom of the swing. Let me just remove it. So you're going to draw it. What's happening? Let me remove this quickly. So you're going to draw your fib from the top of the swing to the bottom of the swing once more, and now you're waiting for that pullback to happen. Pullback to what? Either the 50%, the 61.8, or lastly the 78.6 Fibonacci retracement zone. Now let's play. Now price is just stalling over here, right? But still respecting the 0.00% fib. Now it's pushing to the upside. We're looking for some selling sensitivity in and around this region over here. Just around this region, this is where we're going to be looking for opportunities to sell into this market. Alright, we have a price action signal over here, right? Price was showing a slowdown in selling, in buying pressure. We have tails to the upside. We have 1, 2, 3, 4, and then the fifth one. This is what we call a pin bar, a bearish pin bar, right? Price respected the 50% fib together with the 61.8, and also just to add further confluence, we have a weekly resistance level at 1.32500, which is acting as a strong weekly resistance level. Look at that, a lot of selling pressure within our golden pocket. This is where we take our entry. Now we're anticipating price to move to the downside. So now let's play. Alright, so price is currently stalling in and around this region. So we'll see what's going to happen within the next few days of our USD CAD. Obviously, I'm going to be updating you about this trade on my social media platforms, mostly Instagram, because that's the platform that we use the most. So be on the lookout for USD CAD on our Instagram, where I'm going to be updating you guys on how to use your Fibonacci and how this trade will be going. So I love you all. Thank you so much for tuning in. Peace.